Hello folks, welcome back to Let's Talk Safe Money TV and Radio. My name's Len Strickler, co-founder of LS Financial Group, and I'm here with my partner Art.
Athanas.
Art, nice to have you here again today with me. Both of us here are co-founders of LS Financial Group, folks, and today, if you like what you see, go ahead and hit the like button below. We'd appreciate that, and pass on this if it's you find it to be helpful. Pass it on to some of your family and friends, okay? What we want to talk about today, folks, is we want to talk about taxes. Now, right now, I know everybody's worried about inflation, okay? We got the market's really correcting big time. We're worried about inflation at 5 or 6%, probably more than that, folks, if we really want to know the truth. All right, but another thing we have to consider today are taxes. Because folks, when you're in retirement, the inflation and taxes are two things that could really kill you. Today, the master chef, I call Art the master chef here. I'm just a sous chef, folks. I cut vegetables and I get out of the kitchen. But Art's been doing this 32 years here, okay, and he cooks up recipes. So he's got a recipe today about how we can use some techniques to help you either mitigate or get your taxes maybe to zero.
So let's talk about the potential increases in taxes. We know where the national debt's at 30 some odd trillion.
Oh man, yeah.
So taxes have to go up. So right now, you know, we're looking at the tax rate. And the tax rates presently, the bottom line is 10% and the top bracket is 37%. Now the economists that we know, some of the top ones in the country, are looking at a future tax rate, believe it or not, the bottom rate of 25% and the top rate of 88%.
Wow.
Right, 88% top rate. Now, as you know, people get say, well, is that possible? Yeah,
No,
it's never going to go there.
That time seemed
Well, let's take a look back. 1960 to 1963, the tax rates, the bottom rate was 26%, and the top was 87%.
No.
That's pretty much what they're
Wow.
predicting here in the future.
Wow.
So, with that in mind,
That was the year that Ronald Reagan, our president, right? He would only do 2 movies a year. He got paid $100,000 each, right?
That's right.
And that tax rate was right in there, right? In
Anything
1960.
anything over $200,000 was actually over 90%
at that time.
At that time.
Wow.
So what does that mean? That means if he does anything over the 2 movies,
it means I'm going to the farm and ride my horses.
Yeah, because he wouldn't get anything out of it.
He wouldn't get any money.
So,
and then he had to pay California state tax too. So anyway, go ahead,
right.
Art.
So, yeah, so it doesn't make any sense. So two movies, that was it. So now, what can we do? We're looking in the future and saying, if tax rates go to that, doesn't it make sense to maybe take a look at Roth conversions today? You know, we're almost at the lowest tax rate in 80 years right now, believe it or not.
Wow.
So if we could take advantage now for the next couple of years, maybe while the rates are down at this level.
So you're talking about Roth conversions, right, Art?
Right.
This is where we take
that
a middle
401k money or IRA
IRA.
money that's going to you're going to pay taxes in the future when you retire, taking the money out. So I have a nice case here, an example for you. This is a client that had $750,000 in a 401k. So we said, what if we did this Roth conversion? How much can we save? So the cost to do the conversion, if they did a whole lump sum, the whole $750,000, right now he's in a 25% tax bracket, he'd pay $187,000 in taxes, and he'd be done with it. His whole account from then on, growing, would be all tax-free.
That's if he does the conversion.
If he does the complete conversion.
And pays the tax on it.
Pays the tax now, $187,000.
Okay.
And the rest of his life, he never pays tax on all that money and all the growth. Now, what if he doesn't do that? What if, like most people, they just hang on to the money, leave it in their 401k, and pay the taxes in the future? This is without the taxes going up. This is just at a 25% tax rate.
Wow.
The RMDs alone, he's going to pay $290,000 if he lives to age 90 in RMDs, taxes.
That's a requirement minimum distribution that he has to take.
The taxes on the RMDs would be $290,000 at 25%. And then if he didn't use that money that he was taking out because he had to take it out, he's probably going to reinvest it somewhere.
Yeah, probably.
If he reinvests it, then he's have capital gains on that reinvestment through his lifetime.
Wow.
There's another $163,000 of taxes till he's 90.
Unbelievable.
And then what happens when he dies? Whatever's left in that account is all taxable. So his heirs, his kids, his grandkids inherit it, and they pay tax on every dollar. That's another $269,000.
Oh my goodness.
So on $750,000 through his lifetime, it's $723,000 in taxes, opposed to if we made the conversion now, 187.
Art, that's just unbelievable, isn't it?
And we can do this 187 over a couple of years. I mean, you have to do it at one time.
And this over here on this side, when he does the Roth conversion, right? All of that now is tax-free to the heirs, everything. You don't have to ever pay.
Nobody
any
ever pays tax on all the growth, doubling, tripling through the years. So it really makes a lot of sense to let us do a plan for you. Take a look at it. We don't charge a fee, and we'll just put the exact same picture for you with your exact amount you have in your retirement plans.
Well, folks, there you go. The master chef came up with another great recipe, didn't he, huh? So, folks, we're here to help you. All right, give us a call. If you like what you see, of course, go ahead and hit the like button below. And also, if this helps anybody in your family or whatever, please pass it on. And give us a call at 239-908-1685, or you can check us out on the web, lssafemoney.com. That's lssafemoney.com. Until the next time, be safe.